Idior, this is King Black with another one. Man, this stock market is killing me. Over the past 8 months, it has dropped from about close to 37K down to about $28,000 right now. The stock market index, at least, it's killing me. I'm saddened. Saddened, man. This money has evaporated over the past 8 months. So, what's my current strategy? Current strategy, as straightforward and as easy as it sounds, is also one of the hardest. I'm buying into the dip, contributing even more to my 401k. I'm trying to balance out these losses from having, I have a consistent percentage of my income going into the 401k. And it hurts. I've seen it, a few months ago and it looked nice, and compared to what I saw a few months ago, it has gone down. So, since I'm in it for the long haul, since obviously I'm not retirement age yet, I know that eventually things have to get better. It might take 3 years, 5 years, maybe even 10 before eventually, it goes back to where it was, unless the Fed puts the money printer back on. If it starts stimulating the economy, then who knows, it might just drastically jump straight back up. But I'm buying into the dip. And it sounds simple, but it's a lot harder to do, because your first instinct is let me pull my money out. Let me pull my money out the stocks. Let me pull my money out my investments. Let me go ahead and hoard this cash. But yes, it sucks that it just seems to be bottoming out. It's just constantly going down. You might have a dead cat bounce, and then it'll go back down and down and down. So right now it's trending down. It's having a market correction. With all the inflation woes and inflation fears and percentage rates for mortgages at almost 7%, and it's just, and price of gas and everything all around us is getting more expensive. So right now, while the Fed is trying to figure out how to control inflation, the market is going wild right now, because it's already having the deep recession fears right now, if not a depression. I don't think we'll get as bad as the Great Depression, but hey, them grocery bills hit, they hurt a lot more than they did a few months ago, or maybe say a year ago. A year ago, it wasn't as bad, but now, went to buy a package of chicken thighs the other day when I'm used to seeing $9. They're now 16, 15, 17 for the same amount. So, and I extrapolate that for everything else, milk, eggs, bread in some cases up 10%, 15%. Heck, even the Dollar Tree isn't the Dollar Tree anymore. It's $1.25. So you extrapolate that nationwide with all the other costs going up. Health insurance premiums for those of us that work and have that taken out, our checks are most likely going to go up next year too. For those of us fortunate to get cost of living allowances every year, we don't even know. Inflation has already eaten that up pretty much. What I'm saying? We're just trying to drown less, whatever the COLA ends up being, for us next year. So, as hard as it is, I'm just staying consistent. Consistency is key. Same thing with working out. You're not going to, hit it extra hard for a month, then take it super light for 5 months. You have to stay consistent, give the same amount of effort, or if not, go harder to see results. So in my opinion, same thing with investing. But you got to be smart about it, not putting it into meme stocks hoping it'll blow up, not putting it into certain meme crypto hoping that it's going to blow up. Those are anomalies. If they do, then good for you. But I've said this in the past, I'm more of a conservative investor myself. So I'm more of a stocks guy. I'm not into options. I'm not into speculation and all this stuff like that. I could have made buku money back when Facebook had its IPO. I could have had buku money when Bitcoin was like $100 a Bitcoin. I remember those times. Hindsight's 2020, But at the end of the day, throughout those times, even though I didn't invest in those things, I've still remained consistent in my investments, and I have gotten some gains. So that's what's important. What's important is I didn't really lose any money so far. Even though the market's down, I'm still up year over year. So in this market that we face an uncertain future with everything that's going on, my best advice is keep plowing at it. I know you might not have money to put anything extra, but don't also take anything out. I mean, what goes down must go up, unless you have to pull that money out in the next 6 months. You're going to go ahead and retire or something like that, then I understand. But at the same time, if your time horizon is 2 to 5 years out or longer, I mean, it's not financial advice. I'm just saying my personal opinion is, it's better to just, hey man, continue to dollar cost average your investments. Buy while it's dipping, so that way eventually, once it does creep back up, once the stock market does get closer back to where it was 8 months ago, all of those dollars that you put in on the dip will start growing exponentially once it's going up. And if that doesn't happen for a year or for 3 years, you have 1 to 3 years of buying at the bottom, so that way once that eventual rise happens, the dollars will multiply in theory, right, on paper. So nobody can time the market. Nobody really knows, because even if we get a good sense of where the trend is going, outside factors could happen. Foreign countries' economy could collapse. Look at what's going on in the UK right now with their bond market and everything like that. So these are all external things we can't control, we can't foresee necessarily. You know, when it's going to happen. What's going to be that final straw that's going to break the camel's back, as they say, you know. So, yeah, just the stock market hurts. I'm not even looking at my balance right now. I'm just like, you know what? Once it starts going back up, and I'll wait for like a few months of it bouncing back up before I look at it again to see what my balance is. But right now, I'm not trying to get sad. I'm not trying to get depressed. I'm not trying to get that fear of it's only going to go lower. You know what I mean? I just feel unfortunate for the new people coming into the labor market who are just now starting, which in a way, it's a good thing because now it's going down, so they didn't really lose too much. But it sucks to be buying at the peak just to watch it fall, you know? It always hurts, but the stock market goes like this. So it's been a while since the last recession. I watched a ton of videos, read a bunch of articles. You know, we're overdue for one. And for those of us that have jobs that provide us job security, you know, you hope they're going to be all right. It's going to be tough. But for those of y'all that live in at-will employment states, or those of y'all that have temporary jobs or who are self-employed, that's even scarier, because you just got to hustle that much harder to maintain that cash flow, because one day that well can dry up, and then where are you at, you know? So I know that we have a quiet resignation movement going on. I know that we have a quiet, you know, we have people that, you know, feel like they can pick and choose where they work at, you know, when a decade ago you were just happy to get a job, you know. So I don't know how some people are surviving out there. I don't know if they're doing illegal hustles, if they're out there still pulling COVID scams or PPP loans, or, you know, maxing out credit cards. Because if you listen on one side, the Fed is saying that a lot of Americans still have savings, but from what I'm seeing out on the street, from what I see from people that I know, and from, you know, from what I'm watching in the general area, people ain't got money like that. Whatever the Fed is thinking are the people that are probably making $150K and up, in my opinion. Because some people who might be making that right now might say that they're still poor. But in my opinion, if you're making $150K, I can survive on that per year. You know what I mean? Even after taxes. If not, then you're just living beyond your means. You're trying to live that Gucci Prada lifestyle, you know. But I pray that all of y'all are well. I hope that all of y'all have blessings coming your way. I hope all of y'all's money moves come to fruition. Hope all of y'all become successful. Hope all of y'all take care of your families, take care of yourself, most importantly, mentally, physically, spiritually, emotionally, all of the above. But let me know what your strategy is. Did you pull everything out as soon as you saw that it was now a bear market with what the Fed is going on, and from what we can see for the near future is going to be continual rate hikes? Or did you do like me and just let your money work and just say, you know what, I'm not sweating, because it's not like I was going to pull it out in a couple months anyway, so whatever it's got to do is got to do. I'm going to still put money into it. I mean, I'm the same way that I was with silver, you know. Silver went up a little bit. I still put, you know, consistently. But once it started breaking the $22, $23 an ounce, I stopped investing in it for a minute, because I felt like, if anything, I should sell a few of the bullion that I bought for $15 a round, you know. Now that it's kind of fluctuating and kind of starting to go down the downtrend, I might start buying again when silver hits $18 an ounce, $17 an ounce. But until then, it's just a waiting game, man. You know, don't put anything in investments that you legit can't afford to lose, or that you anticipate needing in the next 2 or 3 months. Because interest rates on these credit cards and the personal loans and all that are insane, man. Don't burn your money. You know what I'm saying? Don't be like the Joker from Batman and burn your money. You know, only put what you can legit afford in the stock market and just leave it alone. Just pretend like live without it, you know what I mean? Kind of like how you do tax deductions at work. Do the same thing with your investments. Just put a set amount aside. Doesn't even have to be much. It could be $15 a month, like I do with my Betterment account. Just every month, first of the month, whatever the market is doing, yo, $15, $15, $15. And that's just a play investment account, because I'm not picking any stocks or anything. My main meat and potatoes are the 401k and my physical bullion investments and other things that I got going on. I'm also thinking about branching into real estate, not necessarily flipping houses or selling houses or anything, but I mean like something I heard recently about, arrived.com. So I'm going to look into that. Sounds pretty interesting. I mean, with the way that the rental market has been going over the past year and a half, even if a recession happens, people need somewhere to live. So, I mean, we are at a disadvantage when it comes to housing. Look at the homeless population out there. Look at Philadelphia, look at DC, look at Cali, you know, look at LA. A lot of homeless people out there. And we're getting this influx of immigrants, not just from Afghanistan. We got the Ukrainians coming in. You got people crossing the border from the south, and maybe even from the north in some cases, much smaller isolated cases. But these people need somewhere to live, and all of these refugee organizations, all of these other type of assistance groups, they're gonna place them, even if it's temporary housing, they're gonna place them in your local areas, and that's gonna raise the rental market. So there's less space. I mean, and you need somewhere to live. So, looking into that. Let me know below what your strategy is. You know, I think it's healthy to talk about money. It's just important not to stress too much about it, unless you are a huge spender that you make $100, you spend $99 of it. That's dangerous. But we'll address that another time. ADR, this is King Black. See you next time.